Now speaking, Barbara Smith, Chairman of the Board, President, and Chief Executive Officer. Good morning everyone and thank you for joining CMC's third quarter earnings call. This was another period of outstanding financial results as we reported net earnings of $234 million or $1.98 per diluted share on net sales of $2.3 billion. Core EBITDA for the quarter was $391.7 million, an increase of 29% from the prior quarter. We are pleased to announce the operational startup of Arizona 2, our new micro mill, which is the only one in the world capable of producing both rebar and merchant bar in a continuous process. This mill will extend our geographic reach in merchant bar to the West Coast and provide optimal access to the sizable Southern California and Arizona markets. Additionally, it is co-located with our existing Arizona micro mill, allowing for shared staff support, production optimization, improved production scheduling, and shared site infrastructure. Output from our new mill should cause minimal market disruption as we have maintained CMC's presence in the West Coast following the closure of our former Steel California operations. At full run rate, Arizona 2 will produce approximately 350,000 tons of rebar and 150,000 tons of merchant bar annually. We anticipate Arizona 2 will achieve break-even on an EBITDA basis during the first quarter and improve from there as production increases, assuming metal margins remain consistent. We expect the mill to add roughly $70 million to $80 million to CMC's sustainable through the cycle EBITDA. Progress at the future Steel West Virginia site remains on target and we anticipate receiving the air permit in the coming weeks. We purchased Tensar, an industry-leading provider of engineered solutions for ground and soil stabilization, with the expectation that it would represent a significant new growth platform for CMC. In the first year since the acquisition, Tensar has generated EBITDA of $61 million and launched its newest geogrid design, InterAx. We have a clear path toward executing on a broad commercial strategy that leverages a unique portfolio of reinforcement solutions. We also completed several bolt-on acquisitions to secure critical inputs and enhance our ability to serve customers. These acquisitions will help us meet growing demand and further optimize our footprint. Overall, CMC had a successful third quarter and is well positioned to deliver strong long-term value creation opportunities. Now speaking, Peter Matt, President. Good morning to everyone on the call. In my first 2 months as President, I have had the opportunity to visit many of our sites and meet our employees. It's clear that our team members are dedicated to our customers and each other and have achieved success in both routine business issues and in spearheading the adoption of technology. Turning to CMC's markets in North America, conditions remain strong with healthy demand for our products and favorable margins. The value of our downstream backlog is at a record level for this time of year, up 4% from last year. Volume in the backlog is also at high levels, and conversations with customers suggest other fabricators have similar activity, which should support finished steel shipments over the coming quarters. Bidding activity for new projects is up 30% year-over-year, representing a healthy blend of private and public work across our geographies. We are seeing strength in local infrastructure projects, manufacturing, data centers, LNG investments, and e-commerce, as well as surprising resilience in office space, general commercial and hospitality. U.S. rebar consumption has been consistently above 9 million tons on an annualized basis since mid-2021 and is 6 to 10% above pre-pandemic levels. This reflects the downward adjustment in the housing market that occurred in early to mid-2022. New residential starts have stabilized 10 to 15% above pre-pandemic levels, despite 30-year mortgage rates nearly doubling since 2022. We believe powerful structural trends have the potential to drive rebar consumption well above current levels, such as reshoring of critical manufacturing, infrastructure investment, energy transition to renewables, and realignment of global energy trade. There is $1.1 trillion of either direct federal funding or announced large private projects that will be executed over the next few years, including $350 billion for reshoring projects within the semiconductor and automotive supply chains. Merchant bar end markets are experiencing stable demand and supply chain inventories appear to be in good shape. Conditions in Europe are more challenging, with slowing construction activity driven by higher interest rates in the residential market. Poland recently passed legislation providing qualified buyers with mortgages at 2% interest compared to the current rate of 9 to 10%, which could provide some relief. Intel's announcement of a $4.6 billion semiconductor assembly plant in Poland provides another encouraging development. Industrial activity in Central Europe is being impacted by energy concerns and weak economic sentiment, but we've been able to maintain historically strong shipment volumes. We expect lower European energy prices and Polish home buying to provide support to our key end markets, while our competitive position will allow us to maintain volumes above historical levels. Now speaking, Paul Lawrence, Vice President and Chief Financial Officer. Good morning everyone on the call. This quarter, CMC reported net earnings of $234 million or $1.98 per diluted share compared to $312.4 million and $2.54 per diluted share in the prior year. Core EBITDA was $391.7 million for the third quarter, representing a 19% decline from the previous record set in fiscal 2022. North America segment adjusted EBITDA of $402.2 million improved 6% year-over-year and 34% sequentially. The Europe segment generated adjusted EBITDA of $9.6 million, compared to a record $121 million in the prior year period. Slide 12 of the supplemental presentation illustrates the year-to-year changes in CMC's quarterly results. Tensar generated EBITDA of $17.4 million during the third quarter, yielding a margin of approximately 25%, up 750 basis points from the prior quarter. As of May 31, cash and cash equivalents totaled $475.5 million with an additional $958 million of availability under our credit term loan and accounts receivable facilities, bringing total liquidity to approximately $1.4 billion. We generated $375.8 million of cash from operating activities and free cash flow of $225.3 million. Our net debt to EBITDA ratio now sits at 0.5 times. We expect to invest between $575 million to $600 million in total capital spending in 2023, and we purchased 352,000 shares during the third quarter at an average price of $46.92 per share. Now speaking, Barbara Smith, Chairman of the Board, President, and Chief Executive Officer. We anticipate our financial performance to remain strong during the fourth quarter, with North America finished steel shipments remaining relatively unchanged sequentially due to healthy end market demand and a historically high downstream backlog. Margin levels in North America should also remain consistent with the prior quarter. Europe segment results are expected to stay similar to the third quarter given the challenging margin backdrop and ongoing economic uncertainty. Our team in Poland is well equipped to handle this difficult environment and will use CMC's market-leading cost position to maintain profitability. We thank our customers for their trust and confidence in CMC, and our employees for delivering another quarter of outstanding performance. Exane BNP Paribas analyst Tristan Gresser inquired, what factors have contributed to the $50 million uplift in EBITDA for the micro mill? Barbara Smith replied, thank you, Tristan. We're thrilled about Arizona 2's progress and had the pleasure of being there on Monday for their commissioning activities. This milestone has us expecting a structural uplift in performance through the cycle due to industry consolidation and other drivers. Exane BNP Paribas analyst Tristan Gresser inquired, could you please discuss the effects of reshoring on your backlog and bid volumes? Barbara Smith replied, thank you, Tristan. Our backlog remains healthy and there are ongoing supply chain and labor challenges that can affect the progress of certain projects. We have seen this in some jobs, but we are encouraged by the bidding activity, which is continuing at a robust rate. This is supported by supply chain rebalancing, onshoring activities, infrastructure investments, and energy transition legislation. We're very optimistic for strong demand both near-term and in the future, particularly in Poland where we are well positioned to participate in the new chip plant. Peter Matt replied, I can confirm that there will be a substantial demand for our rebar due to the infrastructure bill and reshoring projects. Specifically, we expect 1.5 million tons of additional demand each year, plus $300 billion worth of projects with significant rebar needs. To put it in context, one phase of a chip factory requires around 100,000 tons. We anticipate a good backlog going forward for our products. Wolf Research analyst Timna Tanners inquired, what impact has the decrease in global rebar prices had on your operations? How have lower scrap prices and strong fab business offset this decrease? What are you seeing regarding imports and how do you anticipate your markets will fare with these lower global prices? Paul Lawrence replied, you're right, Timna. We've seen a soft scrap market in recent months and anticipate it to remain so for the rest of the summer. This has enabled us to maintain pricing due to the strong rebar demand. This is similar to the second half of 2022 when scrap fell but our margins expanded. The Buy America program also helps to cushion the impact of imports on pricing. Barbara Smith replied, rebar imports are down compared to historical levels, with overall imports stable around 10 to 15%. We've seen some softness in the scrap market due to recent earthquakes in Turkey disrupting their production. This could provide longer-term support for a stable, manageable import environment in the U.S. Furthermore, as Paul pointed out, much of the future demand will be filled by domestically produced materials, limiting competition from imports. Wolf Research analyst Timna Tanners inquired, can you quantify the amount of Buy America purchases and provide more clarity on capital allocation going forward, particularly regarding M&A? Barbara Smith replied, thank you, Timna. Buy America is a federal program for which billions of dollars are allocated to projects in order to ensure goods and services used are produced in the United States. As far as capital allocation, we have had a well-balanced strategy, adjusting our dividend policy, enacting a share repurchase program, and prioritizing growth through greenfield projects, acquisitions, and bolt-on acquisitions. We also look to expand our product offering by partnering with other suppliers to serve our customers' needs more comprehensively. Bank of America Securities Analyst Lawson Winder inquired, "What is your outlook for downstream pricing and margins heading into Q4 and 2021? Paul Lawrence replied, "Our pricing environment in fabrication has been stable and resilient this year, supported by strong demand creating backlogs. We expect to see continued margin expansion due to soft scrap prices in the fourth quarter. Our downstream business is seeing the benefit of complex projects that carry a premium, driving an uptick in margin." Bank of America Securities Analyst Lawson Winder inquired, "Could you tell us about the value of the M&A pipeline right now?" Peter Matt replied, "I'm confident that we'll get the value we need on our investments. We have taken a patient approach, and while that means not every opportunity works out, we are seeing good returns where we do decide to invest. We will continue to be judicious when it comes to valuations and make sure that any decisions we make are in the best interest of our shareholders." Bank of America Securities Analyst Lawson Winder inquired, "What signs of rebuilding and local demand have you seen in Turkey?" Peter Matt replied, "In Turkey, utilization is currently at 50 to 60%. This is due to the combination of damage caused and the difficulty of getting people back to work. We've seen Turkey step away from the scrap buy, resulting in fewer imports from the country than in previous periods. This trend is expected to continue until they can get the situation under control." Barbara Smith replied, "At this time, we have not seen any rebuilding efforts from Hurricane Harvey or other hurricane events. We are still roughly a year to 18 months out before we can expect to see anything measurable in terms of reconstruction. This timeline may be sped up or slowed down depending on government support and priorities." Goldman Sachs analyst Emily Chiang inquired, "What are your insights into fiscal 24 capex, particularly as it relates to the West Virginia mill? Are there any cost inflationary pressures there and what needs to be done ahead of groundbreaking?" Barbara Smith replied, "Thank you, Emily. I anticipate receiving the air permit shortly and there should be no delays to the start of the project. We are seeing some abatement of supply chain issues and inflation impacts compared to our Arizona project. Labor costs in general have risen, as with any project, but we have a lot of experience building these micro mills and will take advantage of all we've learned from Arizona to avoid similar challenges. We'll be careful with long lead time items to avoid waiting or paying higher prices for expediting." Paul Lawrence replied, "Our forecast for capex next year is between $500 and $550 million. This includes our normal ongoing capex, plus 2 large maintenance end-of-life replacements in Arizona too. We anticipate a full year of construction activity in West Virginia due to an expected air permit within the next few weeks which will replace the spending we did this year on Arizona too." Goldman Sachs analyst Emily Chiang inquired, "What are your concerns regarding the potential level of supply growth for rebar over the next couple of years?" Barbara Smith replied, "Yeah, Emily. We track all these projects carefully and are aware of the attention they receive from the analyst community. Some will become reality, some won't. Based on our experience, we anticipate the market will absorb them. We don't expect every project discussed to be implemented. Just look back at the Durant facility, there was a lot of discussion and worry, but it was ultimately accepted by the market. We start by assessing the need in the space, and as stated earlier, there's a significant shift happening that will require strong demand going forward. We'll wait and see how many of these projects come to fruition. At this point, we're not concerned." Citi analyst Alex Hacking inquired, "What CAGR can be expected from Tensar's EBITDA in the next 12 months?" Peter Matt replied, "Alex, to sum up our performance year to date, we've faced some manufacturing challenges that have impacted our EBITDA. Looking forward, however, we anticipate high single-digit growth. The sale of our Russian business due to the conflict in Ukraine was also a contributing factor. Despite this, we remain optimistic and see more opportunities today than when we first acquired the business. We are confident we have the tools needed to grow." Paul Lawrence replied, "Our recent acquisition of the Oklahoma facility has been instrumental in meeting the increased demand for our products, allowing us to capitalize on the growth opportunities outlined by Peter." Citi analyst Alex Hacking inquired, "What trends are you seeing in merchant bar compared to rebar? Are there any areas of strength or weakness?" Barbara Smith replied, "I'd say the market is fairly stable. There has been some fluctuations due to pandemic-related changes in manufacturing activity, but the most encouraging thing is that those changes are likely to support growth in the need for merchant product. Joist and deck may be showing some signs of weakness, but that's been widely reported by larger players in the space than us." Barbara Smith replied, "Thank you for joining us today. We are excited to speak with all of you on our upcoming investor calls and wish you all a great day.